Hello, everyone. It's great to be back with you on this Tuesday for TradeFinder Live. It's my favorite format, being here during market hours. We used to have this webinar late at night, and I can tell you it's much more exciting being able to tackle this during market hours and be able to implement this information from the session right after we get out and get back into the market. So without further ado, let's go ahead and get started. My name is Zach. Great to be back with you all. We need to cover off our disclosure disclaimer agreement, as we always do for our live webinars or events. Essentially, the main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We have this available on our website, so please feel free to read it in detail at your leisure, or take a screenshot of it now if you like, but that's the main point to take away from it. Am I able to? Okay, I just wanted to, I didn't know if I was having audio issues there. I just got sidetracked there. I thought I might have been muted and wanted to make sure everyone could hear me. But anyhow, we're good. Great to know. Lots of exciting events. It's always interesting in this world of digital technology and webinars that we're now in. But anyhow, I'll stop rambling. The Fed President, Neil Kashkari, adds his name to the Fed governors that wants more months of data, and before any talk of a rate cut comes of, that doesn't roll out a potential rate hike as well. So I'm not sure exactly what to dissect from that information. That's why we're here for Mr. Rob Roy to do that for us. So without further ado, Mr. Rob Roy.
Thanks, Zach. Welcome, everyone, to this week's TradeFinder Live, again, live during market hours. And as you can see, back up in the mountains, long drive yesterday. And I'm going to talk about that when we get to talking about oil. We'll bring that in a little bit later on. But let's go ahead and take a look at a chart of the S&P. And as you can see, just kind of staying status quo here as we move sideways, still consolidating this break above the wave 3 high, which did label the wave 5. A reminder that that red line and the arrow, for those of you that may be joining us for the first time, is the zigzag extension going back here. A little bit further back there from those January lows. So right there, that's the A wave, the B, and the C wave extension is up there at 550. On the U.S. market update 2 weeks ago, somebody commented, I can't see where your wave 5 target is. Well, it's over there. And that's why, because it's hard to fit it on the screen. It's got it all the way out to the September-October time frame. I don't know about that, but perhaps. Especially if we get some sort of a correction. As Zach mentioned, Minnesota President Neil Kashkari came out today and said, basically, I guess I was wrong, because I'll hint to that in a minute, or spend more time talking about that in a minute. But he added his name in the hat of those that want more data before any consideration of a rate cut, and did not rule out further rate hikes if warranted. And I talked about this when we had the release of the Fed meeting minutes, where there's a few governors, obviously Kashkari is one of them, that said that very same thing. And I kind of hinted that perhaps Chairman Powell would get on the phone, because we all know the Fed governors want their 5 minutes of fame now. They all show up all over the place talking about what's going on with the markets. Never happened under Greenspan, but new Fed now, and that's the way things go. And I thought maybe he might call people and say, hey, let's really not talk about the whole rate hike thing. But I guess I was wrong, because a couple of them have come out since the Fed meeting minutes were released and have said exactly that. So I guess they feel that they can say whatever they want. And or maybe Chairman Powell didn't say anything. But I have also intimated that I think the Fed may be playing politics right now and don't really want to do anything, a rate cut or a rate hike, before the election. They would be just happy to stay status quo. And then once the election is over, then we start to see whatever move they may make. That's just speculation on my part. I've been wrong on the Fed governors coming out talking about potential rate hikes. So who knows? We'll see how things play out. But for now, as long as we can stay above 525, and you can see right now we're at 529.48, we're okay. Let me add the moving averages on here. and we're above the 10-day moving average. So far you have to stay long. If you're watching the charts, a break below 525 changes everything, though. Then we have to reassess. But in general terms, you stay long at this point in time. One of the great things about being able to do these shows during market hours is now we can look at live charts. I like to look at the 3-minute chart. So I'll bring that up and you can see where we are. And for those of you that have gotten this software, and I really appreciate all the comments on the U.S. market update, on how many of you are really enjoying this software. If you're new and you don't know what we're talking about, go to hub.com, hubb.com, get a copy of this software. It's in beta form. Now it's free. There's nothing to download on your computer. It's all browser-based. And it allows you to have live Elliott wave. Well, then you look down here, it says insufficient data. We need 377 data points. And if you've been around for a while and you're familiar with the old legacy software, the default was 300. Why did I go to 377? Well, that's because that's a fib number. And I believe in Fibonacci ratios, etc. And right now it's saying that, with what we're seeing on the screen, we don't have 377 bars. Each bar is a data point. Whether or not you're looking at a 3-minute chart or a daily chart. So all you need to do is just condense down the chart until we can bring in the point where we get enough data to go ahead and show the Elliott wave. And it doesn't appear that we have the historical data right now. So we'll just go back to the daily chart. Perhaps it's the internet up here in the mountains. But regardless, we're still looking at where we can move up to this level of 550. I do want to go back to the intraday chart and talk about, there we go. See, it just took a moment for the data to load, and that's what happens when you're dealing with, in fact, we had no power about an hour ago. We weren't 100% sure we were going to be able to do this. Let's see if we do have an Elliott wave pattern here, and sometimes we don't. I don't have the ABCs labeled on here. Those are the corrective modes because I prefer to do that by myself. So if it doesn't show up, that means that you don't have a 5-wave qualified pattern. It means you're in corrective mode. And I would just rather draw the zigzags, etc. myself. But if you want to have it on, you can see here, you just go up to plots. You can go to that little spoke there. That allows you to change the settings, and you can put on whether or not you want those on or not. You can see there's the ABC points, and I do not have that box checked. If you check that box, it'll label them for you. I just prefer to do it myself. It's just a personal preference, nothing else. But you can see that we gapped up, came back down from the gap on Friday, and then really not a whole heck of a lot's happened since then. So anyway, let's get back to the daily chart, and we'll see if we can get back to that 550 level. As long, again, as we stay above 525, we're okay. Here's the problem, and Kashkari's comments are not helping this. This is the 10-year, and you can see we're getting a tick up in rates. And another cool thing about this software, if you are new to it, is it remembers what you've drawn in the past. So you don't have to go back. In the old legacy software, you can make all these drawings, put them all on the screen, and then when you brought the chart up again the next day, you'd have to go back and redraw them again. But this software remembers it, which is really cool for when you're doing your analysis. It's a great thing from a technical standpoint because you can see, okay, here's what I was looking at weeks ago. How did it play out? Did the pattern play out? So I just think that's a really cool feature. And we had this upward zigzag. We came back and corrected. Now we're in a 5-wave pattern, which I think is enough to make you a little nervous, if not nail-biting time. If that wave 5 plays out, I have made the comments, I don't see the scenario where we could have a wave 5 move that high in rates. In other words, that rates go that much to the upside. We do not want to put a 5 handle on the 10-year. I think that would spook the market significantly. I think we're okay as long as we stay in this wave 3 area. Although this move here was enough to give us a little bit of a correction before the CPI data came out and was a little tame. That allowed us to move higher in the markets. They gave us the break above the wave 3. But if that PCE report comes out on the 31st and is not tame like the CPI was and starts to show inflation rearing its ugly head again, that's the Fed's favorite indicator to look at. Maybe that could be a catalyst that we move rates up here. So when the Fed keeps coming out and even whispering the word hike, the market doesn't want to hear anything about rate hikes. So if interest rates continue to move to the upside and we have any threat of moving up to that 5 handle or a potential rate hike, that's just not going to be good for the equities markets. But if it stays above 525, we're still okay. Break below that, which 10 handle on the 10-year, in my opinion, would certainly be enough to cause us to break below that support at 525 on the S&P. There's the dollar. You would expect it to be moving a little to the upside along with rates is supportive of the dollar. And so, it's basically going to be these two charts are extremely similar. Both of them have wave 4 corrections right at the 50% range, and both of them have targets that we don't want to see, either one of those. We don't want to see this. We had this triangle here form right at those previous wave 3 highs back in November, and now we're looking at bouncing back up and maybe testing that level again. Luckily, we had this, I used to say rare. I mean, I've said it so many times that it's just kind of normal. I almost said it again. But if you've heard me recently, you know that I've been making the comments that these expanding triangles have been way more prevalent over the last couple of years than they used to be. Normally, triangles are the opposite, where the point's over on the right-hand side. With an expanding triangle, it's the exact same thing. It's just flipped over. The point's on the left-hand side and the mouth is on the right-hand side. Still generate a breakout, which this did. The dollar broke to the downside, and now we're coming back up. And as long as we hold above this established level here, then we'll be okay. It's just the problem would be if we break above this area from October and the highs that the wave 3 high that was set in April. And these tools down here that I'm using, the minus and plus, that's how you can spread the chart or condense the chart. You can also move it around. People have different preferences, whichever way you want to do it. If you like to scroll it, or if you just want to make it quicker, you can just hit the plus and minus arrow. And then after you've done that, you want to go back to where you were, you just hit the reset button. It takes you right back to where you were. So don't mean this to be a software class, but I do want everyone that is taking advantage of the software to learn all the really cool features that are included in it. All right, so let's move away from the dollar and interest rates. We'll take a look at the DIA real quick, see how the Dow's doing today. And there we go. Broke back down to this. This is scary today, I think, on the Dow. If you're trading the DIA, the support level there at 390, you can see we're currently trading at 388. And by the way, that's what that little banner over there to the right means. If it's red, it means you're having a down day. If it's green, it means you're having an up day. But it tells you exactly where the market's trading at the moment you're looking at the chart. So right now we're at 388, which means we've broken below 390. Now, you all know the rules. If you've been watching, you have to have a second day, a follow-through or confirmation day. But if we end up closing below 390, that's going to put a lot of emphasis on what happens tomorrow. Because if we get a second day, follow-through day tomorrow, that basically means, forget this arrow here on any sort of a move higher, that changes the game considerably. That means that wave 5 is done, and we're going to come back to this previous 4. If you're newer to Elliott wave, if the wave 5 extends less than 100%, you get a retracement back to the previous 4. If the wave 5 extends more than 100%, you get a 61.8% corrective move, and that's from the length of the wave 5. So the fact that we didn't go 100% means that we'd be coming back down here to 380 on the DIA. But we have to have that follow-through day tomorrow, so we're not jumping the gun yet. We haven't closed below it yet. for today. But those are the two things to watch. If we do close below 390 today, do we follow through tomorrow and close below it again and close at a new low? That's what follow through means. So we would have to close at a lower low tomorrow than we close today if we close below 390 today. So I know there's a lot of ifs in there, but I'm just telling you things to look at and to watch to try to help in your trading decisions. The Qs to me have been surprisingly resilient, especially today. You can see the green bar, so we have an update today on the Qs. A little surprising to me with Kashkari's comments, but nonetheless, you have to be impressed with the Qs moving back to the upside. NVIDIA, you saw that on the label. We'll talk about that. I know they had their earnings. Also caution people about shorting that move. So far, that's seemed to be the right thing to do, and the NVIDIA is driving the Qs today. So we're up here, but gosh, we've got a pretty darn extended wave 5 there, 149%. So we move past the 138.2% fib level. Maybe we go to 161.8, but we don't normally go too far past that. So we're not that far away from 161.8% extension. If we get there, one of two things is going to happen. We're either going to go to the rare 261.8% extension, and I say that's rare. That is still rare. I've changed my mind on the expanding triangles because they've been more prevalent, but it's still very rare that you get a 261.8% fib extension on anything. It happens. It just doesn't happen very often. The other thing that could happen is that this 5 could relabel to a 3. So if the Qs get really strong, I think we just kind of maybe meander a little bit here until we get that PCE report. That is really going to be a market mover. That's on the 31st. And so you want to be in front of your screens on Friday and see what that number comes out. It's going to be very important to see what that shows. So there you go. That's what we're looking at on the Qs. Again, to me, impressive. Another one of those triangles. This one yielded a nice upside breakout from that symmetrical triangle. And now let's go look at the IWM. That one, it came down, and I was talking about this over the weekend in the weekend update that we came down here to the 50-day moving average. Is that it? Also, another triangle. And for those of you not familiar, these triangles, based on Elliott wave rules, corrective triangles normally come back and test the point of the breakout. We got awfully close right here, but we didn't really make it all the way back to the point of the breakout. But not having too bad of a day today. Little, again, surprising to me. The whole market today is surprising, but we'll see what happens into the close. So far, it's a little surprising. So the question on the IWM has been the same. It doesn't change until we break either above 210 or below 190. The only question right now is that test of the 50-day moving average right there. Is that enough? Is that as far as we're going to go? And now we're going to come up and retest 210 again. That would be the third move up here recently. You could kind of say that, we tested it back in March, and then the end of March, early April was a second test, and we got up here, and that's the third test. Normally, at least one of the things that I learned from my mentor when I first started trading 25 years ago, one of his expressions was the third time's the charm, that when you test resistance or support level, what happens following the third test tends to be what occurs for a while. So is this just an unusual blip up here, and we are going to continue lower? That's what would normally happen based on what he's told me, or maybe we're going to go up and test it again. What I am curious about, and this is again just speculation, is whether or not this qualifies as a zigzag. So if we come down here when we tested 190, there's the A wave extension. Here's the B wave correction right at 40%. So that's call it the 38.2% level. That would give you a 61.8% extension, which would get us above 210 on the IWM. If that occurs, then I do think that means that We're back in a risk-on environment. We'll likely go up and hit that 550 zigzag extension on the S&P, and then we'll reequate from there because we will have satisfied this zigzag on the IWM and the SPY. But once again, we're not there yet. We still have to get above 210, and we haven't done that. I just wanted to show that that is at least a qualified zigzag. There's a difference in Elliott wave terminology between qualified and confirmed. Qualified means that the rules are in place so far. When is it confirmed? It would be confirmed if that C wave extension broke above this A wave extension here from the impulse move in the A, which happens to coincide with that 5 wave move higher there, going back to the end of March, early April. So it's qualified. It's not confirmed yet, and we have to wait and see whether or not we can take another run at 210 or if this is just really not going to hold today and we're going to sell off. It's a nice bounce off the 50-day moving average. Summary, that's really all it is so far. Let's look at the VIX. I know a lot of people have been talking about the VIX, and we are in another one of those expanding triangles, point on the left side, mouth on the right side, and just hovering around this support level that's existed going all the way back to the entire beginning of the year. So 12 and a half, I know a lot of people have surmised that that means a likely move to the upside. But I have to tell you, based on Elliott wave rules, when you have a triangle, Elliott said, don't pick a direction. Understand that a triangle can move either direction. There is no leaning one way or the other. They can go either way, all of them, ascending, descending, and symmetrical triangles. So is there a possibility that that VIX could break lower? Yeah, even though this has been support for the entire year, there is past history where we've broken below 10. We've even gone down into the high 8s and 9 in past market rallies. Now, to get there, I think that has to be a really tame PCE report on Friday, and that could start us talking about rate cuts again. That could propel the markets higher and the VIX lower. If that PCE report is hot, and then the CPI has lost all of its goodwill that it gave us, and we may be looking at an upside breakout on the VIX, which would certainly mean negative movement for the markets. And on that S&P, we'd be watching that 525 level very closely. So we can go either way on the VIX. So that's updating there. Another really cool thing is we now have all the Bitcoins here. Not every one of the altcoins, but we have most of them. If you have the beta form, you don't quite have it yet, but you're going to have it very soon. It's a two-step process, this beta process. The folks at Hub send it to us first at EWO, and then it is released to the rest of you that have it. So you're going to have Bitcoin very soon, as well as the other cryptos. And so we look here. And just cannot get above 70,000. I was watching it over the weekend, and it looked like, wow, here we go. We're trying it again. No, turn back down. Just can't get above 70,000. But at least this time, we're hovering around 70,000. We didn't immediately turn and come back down to 60,000, which is what we've been doing. Every time we went up to 70, right back to 60. And let me move the arrow and show you the arrow. And then same thing here. Didn't quite make it all the way down, tested it right back down. Didn't make it all the way up to 70, back down. So we've been moving around. So perhaps this time consolidating right under the 70. We didn't even move back to the 50-day moving average yet. Maybe this is going to be the time when Bitcoin actually breaks above that 70,000 level. If it does, we'll be off to the races. It's clean air, and we can see who knows where it ends. Some of the people that I talk to that know a bit more about the crypto world than I do are calling for 80 to 90,000 Bitcoin by the end of the year. And also talking about, and I know this always puts a smile on Zach's face, Ethereum. Just were talking about it before we came live on the financial networks. They were just talking about Ethereum. They talked about how it was surprising that we had this approval. But if you watched our Hub Financial show on Friday, you heard the guy that I go to for all things crypto said exactly what was going on, that President Trump came out very much in support of having Ethereum approved. It put President Biden between a rock and a hard place because he said he would veto the bill if it went through. And I don't think he felt like it was going to go through, but it did get approved by both the House and the Senate. And so it's a bit of a surprise that went through. I don't see how it's that big of a surprise. They did it for Bitcoin. Why not Ethereum? And so we'll watch and see if Ethereum can break above that 4,000 level, because if it does, it's off to the races as well. The only difference here is it got on that approval a little bit overbought here. It's a little vertical. We're still separated from the 10-day moving average, but it's a nice consolidation so far without a whole lot of give back. And maybe, just maybe, they can break above that 4,000 level. Based on the commentary, Van Eck, I believe, is the very first one, and that's who they had on the financial networks. And they said they don't have the clear yet to buy it. So even though it's been approved, the ETFs haven't gone in and bought it yet. And that could be the catalyst to propel it higher. So keep a very close eye on Ethereum moving forward here. That's going to be key, the 4,000 level. So we're looking at 70,000 on Bitcoin, 4,000 on Ethereum, and we'll see where we go from there. Taking a look at some of the other markets that we like to look at, I left out SLV on the market update just because we can't get everything in. And silver came back down to the 10-day moving average, and look what it's doing today. It's having another nice big move to the upside today, which is helping GDX, which was our case study consideration from last week's TradeFinder. But down here, got a little vertical. And if you're not familiar with the rule, you've been under a rock or you haven't been watching, some that have watched this a lot have heard this in ad nauseum. But I don't like vertical moves because what goes vertically up often comes vertically back down. And that's what happened with SLV, but it did exactly what it was supposed to do. It went up and then came back down to the 10-day moving average. And now we're almost overbought again. So we're having a nice day on SLV. And so I wanted to make sure I covered. I promised I would in the comments. And if you haven't watched the U.S. market update, you only have a few days left. Go leave a comment and get into the drawing for a free level 3 subscription here at EWO. And it's a combination of our impulse strategy that's AI infused, the volatility strategy, which is triangles that can break out, as well as our time strategy, which is sideways. It's an income-based strategy. You don't hit home runs there, but it's designed to allow time decay to be your friend, which is normally an enemy for people that trade options on the long side. Make sure you go to that recording and leave a comment. That's all you have to do to be registered. We're almost at the end of the month, and so we'll be doing another drawing. So go do that real quick if you haven't already. It's on the Elliott Wave Options page on YouTube. So, and so I was referring to the fact that I had left that out in the update because I put Ethereum in instead because Ethereum was such in the news. But I promised to show it today, and I did. So I fulfilled that. So that's SLV. We'll look at GDX here in just a moment. I did say that I wanted to talk about oil as well. So let's take a look at USO. I'll even throw in a bonus on natural gas because you guys are probably going to ask about it anyway. It kind of gave us a little potential thrill and then backed off. But I can tell you based on what I saw, y'all know when I travel back and forth between the Dragon Capsule in Florida and here in the mountains, I usually drive through the night so that I'm not away from the markets. But yesterday being a holiday, rare trip for me during daylight hours, and traffic was insane. From start to finish, the entire drive was full of cars. So I don't know if that's an early indication that the consumer is still going to be traveling in the big upcoming holiday season, over the summer when everybody travels. But they were traveling yesterday, I can tell you that, and stopping for gas. I don't know if y'all are familiar with Buc-ee's. I've mentioned Buc-ee's before, and a lot of you said, "Oh yeah, Buc-ee's is great." Well, they have 9,000 pumps now. That's exaggeration, but they've got a ton of pumps. I had to wait in line to get to a pump at Buc-ee's. So if you're not familiar with Buc-ee's, you know what I'm talking about. What's that?
A full 100 pumps, just for clarification.
Okay. All right. Not 9,000.
Still a lot of pumps.
Yeah.
Still a lot.
100 pumps. 100 pumps, and I had to wait in line to get to one. Can you imagine that? That's how busy it was. So anyway, my point here is that you can see oil is bouncing to the upside today. And if demand doesn't dramatically fall off on oil, I think that's going to continue. Another expanding triangle, and we could bounce to the upside here. I don't think the economy necessarily wants to see oil go that high. Certainly could factor into the whole inflation picture, food and energy, although, yeah, the Fed will X food and energy on the CPI, but it will be in the PCE report. And I had talked about if we did get a downside breakout of this expanding triangle, I didn't know how long that would last. We've talked about this numerous times, that OPEC has been very vocal. They see the end game. They know they have a limited amount of oil. They've done all the geological studies, and they want to make as much money as they can with as long as they have supply. And I don't think they would let oil go too low before there would be all kinds of news about OPEC production cuts to hold the price. But we could get some sort of a little bit of a downside breakout. But for now, it looks like we're sneaking to the upside. We're not there yet. It's not an official breakout yet, but it's looking that way. And from what I saw, there is no shortage of demand on the oil side. And you know how the markets work, supply and demand. We look at Elliott wave, we look at confirming indicators, things that never change as far as the world of market. Price to volume action always matters, and it's a supply demand thing. That's how the markets move. That's part of the nature of the markets. It is supply and demand. If there's a buyer, there has to be a seller. If there's more on one side, then the price moves. It's just how it works. That's how the markets work. And so that's how everything works. So, yeah, I mean, the move up in oil today is certainly cognizant of what I witnessed yesterday. I actually thought driving on the holiday might have been a good day to drive. You know, people doing barbecues, etc. I left early, so it wasn't like I was driving at nighttime when the end of the day, but even early in the day, people were on the roads. So anyway, I wanted to give a little commentary on oil. So I don't want to take up too much more time so that we can get to what we want to see on our case studies and questions. So I did want to review the previous case study considerations. I don't know if you noticed it or not. We had TT that we looked at back on, what was that, the 6th? Oh, the 30th of April. And I did post the close of that on the TradeFinder page. Zach's going to show you how to get there if you haven't already. So we're down over $6 today. I spread the chart out a little bit here. You can see there, see how we're down. So that close was very timely on this move up. We didn't quite touch the line of 340, but we got awfully close. So that was a very successful case study. It was posted. And if you're not looking at those things, you need to be, because it's a great feature on here. You know, people talk about Reddit all the time. We have the exact same thing here, and you can post your own ideas and people can vote on them. And Zach will give you an illustration of that at the end. So we're taking TT off. It is posted. So, now there's accountability here. It's not like I just say, oh, we close that out. It's on the website for TradeFinder. And then the other two that we had AXTA. That was back on the 9th. It has pulled back a bit, but as long as it holds in this area here, right there, right where it is now at 35, we got a little overbought. We came back down. As long as we hold 35, I think we're okay there. So I think that's a hold and see what plays out. And then GDX that we did last week had pulled back, but there you go. There's that bounce up. As I mentioned, when we looked at the chart of SLV, GDX is moving back up. So that looks good so far. And right now, it just looks like it, okay, got a tiny bit overbought from the 10-day moving average. No security in any time frame, just far from the 10-day moving average. So we came back down, tested the A wave high, and now we're bouncing back up. And perhaps we go up and hit that C wave extension, which is what we were looking at originally. So both of those are still in play. Keep those going. That's the only two what would be considered open case studies in TradeFinder. And I wanted to show you this. This is also a feature that you're going to have, much to my chagrin here, and talk to the, in jest, to the folks at the at Hub, trying to combine the Fed and Hub there. The AI button. Once again, I have this, and once the full version is released, you guys are going to have it too. So you're going to get the AI signals from the data scientists that were hired by Hub. How freaking cool is that? And if we go look at this, nothing. From Friday's close, there wasn't a single bullish candidate. And then when we look at the bearish side, the first one is INSM, and that's in biotech. Drugs, stay away from that. We've joked we don't do drugs. I tried to do one a year or two ago at EWOTrader.com, and you just can never tell what's going to happen. So anything that is drug related, we stay away from. But the one we want to look at is UPS. And it's not much of a move left. It is having a down day already today, which is a little disappointing that we weren't able to get here sooner. But you can see the score here is 58. That's not high enough to count as an idea. So this one's going to be a post. And the target price here is 134.40. And yeah, as I said, when this is released to everyone, this is exactly what you're going to see on your screen. You hit the AI button, it gives you the list, it gives you the scores. We like a score of 75 or above. You can pick your own. At 58%, it's still better than a 50-50 chance, but we prefer to wait for the higher scores. We haven't done much to the downside, but we're going to use this. It'd be a quick one, 136.65 now, so a little over a $2 move, lower on UPS. And then it also gives you your stop. Everybody always asks about stops. That's what the fail zone is. If it were to move back up and break above that, that would be your exit. You'd be out. So our idea for this week, again, not a post, Zach. It's just going to be an idea here. Is going to be UPS down to 134.40. So just a short, quick move there. Still good enough if you trade options to be able to have a nice result out of it, but give an opportunity to show the features of the AI. So with that, Zach, I'll just go ahead and move back over to you for some questions, and then give yourself about 5 minutes at the end to show the folks how to go into that area that I was talking about and post the idea, or the
Absolutely.
post in this case.
Sorry. Wait, so it is a post or an idea? Because I think we said, did you say it backwards, or is it supposed to be an idea?
It's not an idea. It's just a post.
It is going to be a post? Okay. Maybe I heard it wrong, but I think I heard it the other way. Anyhow, we'll get to that here and make sure.
Not a full-fledged idea.
No worries at all. It's still technically Monday with the holiday, right? So still getting going. Let's start out with a symbol here from Manuel. Wants to know if there's a reversal on Moderna mRNA.
That was in the news. So it's, as always, it's one of the things that we like about the Q&A here. You all ask great questions. You're paying attention. You know what's going on in the markets. Right now, it's just, it rocketed up, and it goes to exactly what I was just saying. No security in any time frame, gets too far away from the 10-day moving average, and what goes vertically up oftentimes comes vertically back down. So it's covering both of those. right here in one shot. So I don't know that this is a reversal. This is just simply correcting an overbought condition. Got too far from the 10-day moving average. It got too vertical. No, I don't think it's a reversal. It's just doing exactly what it's supposed to do. Now what we need to see is, does it hold in the 150 range? Can it hold here, which I would suspect it does? And then we turn, maybe we go sideways for a day or two. What would concern me on this is if it broke too far below the 10-day moving average. If it does that, then perhaps that would be game off. But for now, no, I think it's just doing exactly what it's supposed to do. And again, a perfect example of those two rules that I talk about. Robisms, as Zach calls them, are I say them because they work, and you need to pay attention to them. And this is a perfect example. So, long-winded answer to your question: no, I don't think it's a reversal day. I think it's just doing exactly what it's supposed to do.
Very well. Thanks, Rob. And just to add further context to those pillars that you were mentioning, your Robisms, as I do like to call them, we have lots of exciting blogs that are going to be available on our new website that will break down all of those Robisms in depth and detail, and you can read them at your leisure to get a full concept and really absorb the material behind those Robisms. I also wanted to take a moment before going to the next question to remind everyone that this is the last session for TradeFinder Live that will be on Zoom. The next session, I believe, will be June 4th, and that will be strictly on YouTube and all of the other streaming platforms that we currently stream to at the moment. There's just a number of reasons as to why it's more efficient and the right move for us. So I've sent some information in the chat there as to how to subscribe to YouTube if you haven't already. Also, it's a dual purpose there. Subscribing goes a long way for us. The likes, all of that really bump our algorithm, and it's a cost-free way of supporting us. So we greatly do appreciate that. All right, let's get to some questions so I don't take up too much time. What's going on with CVX for Will?
CVX is doing a little better today, and I think it goes to what I just showed on oil. As a reminder, the C wave extension and the AI target are the same price here. I like it when that occurs. So we had a move. We've gone through some consolidation, and I think that, a little bit of an update today. We did bump our head on the 50-day moving average, but if oil continues to break out to the upside, I think Chevron's off and running as well. So far, I think we're just we're moving nicely. On this, we had an early breakout of the ascending triangle. We've come back and tested it. Now we want to see it back above 160. That's going to be key. But I think it looks good for Chevron with the way oil seems to want to go to the upside. So not concerned about that one yet.
Very well. Thanks, Rob. Harvey here says, will we get the invites on email like before? So you will not receive an invitational email like you did from Zoom. However, as long as you are subscribed to our channel and have your notifications turned on, you will be notified as soon as we go live. And another aspect to remember there is that this session will always be at 1 p.m. Eastern time every Tuesday. There's no fluctuation in the actual time or day for TradeFinder. It will always be, unless further instructed, Tuesdays at 1 p.m. Eastern time. So that's another thing to always count on. All right, so back over to some questions here. We covered a lot of NVIDIA talk last week, but we've got some chatter in there expectedly. I'd be talking about it as well. And Young here says, thinking about going long on NVIDIA, also on the stock split, is this a positive effect on the stock or not?
Yeah, I mean, the move today is really amazing. There was a question that came out last week on, would it be after that big move up, a good short, going back to gaps get filled. And my comment to that was, I don't think you want to short NVIDIA right here because of the stock split. And talked about that in the U.S. market update as well. Normally, people don't sell the stock into the stock split. After the split, might be totally different. But that's one of the things that keeps people in a stock is the stock split. And you can see what's happened today. Another big update in NVIDIA. I believe, if I'm right, the split date is June 7th. And that could be when, all right, it's a 10-for-1 split. What happens oftentimes is, and I know people view a stock split as a bullish thing. The stock split itself is neutral, right? I mean, it's not a bullish or bearish thing. But what's normally bullish is the reason companies split stocks is so it makes it more attractive to the majority of traders. We're dealing with a stock trading over $1,000. Not everybody has $1,000 to buy one share of NVIDIA in their portfolios. If you do, great. But now we're going to do a 10-for-1 split. So we'll be way back down to where the majority of traders can buy NVIDIA if they want to. So what ends up happening when you have those big splits, especially for those that have owned it and they've benefited from this big run up here, is they'll sell some of the shares. They're getting 10 shares for every one they had. So oftentimes right after the split, there's a little bit of a dip, and then perhaps you get the move. That's what normally happens. Again, nothing happens 100% of the time, but I've done a lot of trading splits in my day, and so you get the move on an announcement. Maybe a little bit of a surprise that we moved that high on NVIDIA today, but what did not surprise me was we did not come back down. And again, some were wanting to go short, and I strongly encouraged against that moving into the split date. And now we're getting quite a bit overbought. You can see where we are from the 10-day moving average. Just powerful move there on NVIDIA. So let's let it have it split, see if it has a little bit of a dip afterwards, and then perhaps that's the time to step in. But with a 10-for-1 split, it's going to be a little bit more difficult to have these kind of volatile moves. It still could run higher, but it's not going to run higher in this kind of a mode, in my opinion, after a big split like that. But the problem is right now, it's so overbought. I don't know if I would chase it to the upside now either. So I wouldn't have shorted it, but now I don't know if you go long. Didn't expect to see a move like that today. I did expect it to hold and then go a little bit higher into the split, but not like what's going on today. And I just feel like it's so overbought. Those that have wanted to buy are probably in now. Let's see what happens over the next few trading days. And as we move into that split date, you'll get another opportunity, especially if it does follow through and dip after the split before it turns to run back. So I would also discourage buying on the split date. As I said, when you get that many shares, a lot of times people sell some of it to take profits and then hold the rest. And so there's some selling normally right on the split before that turn and move higher. So, yeah, I felt like we were going to talk about NVIDIA. We left it on our intro banner. So not a surprise that people are wanting to talk about this. But to me, the surprise is how much it's moved today. Didn't see that coming today.
Hey, Zach, you're muted.
I think you're muted, dude.
Guess that's important if you want to hear me, huh? Let's go over to Apple for Brian.
Apple's in the news again. Golly, you guys are so on top of things. And they're talking about Apple today too. And the great thing about Apple, I've said this, and I might have missed a move here or there, but Apple's a stock I refuse to short because they have so much money and they buy back stock like nobody else, and it just makes it difficult to short it. And that's what they're doing again. And so now Apple's gotten a little bit of a bid into it, and you can see that we're at here's another Elliott wave rule here, so this is good. You can see that we have a 5-wave pattern to the downside, but note that wave 4 is now at 86%, which means we have disqualified that Elliott wave pattern. Once it moves past the 78.6% fib level, the Elliott wave pattern is disqualified. So we're not in an Elliott wave pattern before. Perhaps we're in an impulse pattern. We'll see how the algorithm labels this, but it certainly looks like that is a new impulse move. How far does it go before we get a corrective move? But as long as we stay above this 10-day moving average, I think it's interesting. As you know, I like to give both conservative and aggressive because we all have different risk tolerances. You know what your own are. And if you're aggressive, I think you can take a shot here. If you're more conservative, let's let it get above that 190 level with follow through and then step in. But yeah, with the amount of money they have, it's only at a 20 multiple, which is very low compared to where the rest of the tech world is. So you can almost say it's kind of value. And I think that's what's going on here. There's been some rotation. That's what always happens when you have big runs. And we know all about the big runs in the big tech stocks. And then money looks for where's the underperformance been? What stocks have underperformed in the move? And then that's where the money rotates. And I think that's exactly what happened with Apple. But now we have to wait and see if we can break above 190. So that's the key there. No Elliott wave pattern, new impulse move to the upside. And if you're just a touch more conservative, just be a little patient and see if we can get above 190 with follow through. If you're aggressive, I think you can go ahead and take a shot now. But if we break below that 10-day moving average, then you would be out. Unless you're okay with holding it to 180. But if we can't get above 190, we may come down and test that 180 mark again. Someday we'll fill that gap. But the thing with gaps, our AI data says 94% of gaps get filled, but you never know when. Sometimes it takes a while, and that could be down the road before it gets filled. But yeah, Apple in the news again, so you guys are all over it. A couple more real quick, Zach, and then go ahead and post that UPS trade.
Yeah, you read my mind. I was going to say we have a very well-informed subscriber base. Always love and seeing the questions come through and sparks ideas for myself, and I'm sure there might be others out there. So we'll do one more symbol, and then we'll go over to the platform demo tutorial to wrap up this session. Diligent one from YouTube would like you to look at SMCI.
Oh yeah, it's another good one, and it hasn't moved today with NVIDIA, but it's getting up there, and it's at some point. Because there's two main ways that you make money off stock splits. One's on the announcement, and then the second one is after the split, the whole scenario that I already went through with NVIDIA, so I don't need to do that again. So I'm kind of wondering if SMCI may come out with their own stock splits, also $1,000 stock. We had this descending triangle. We've broken out. We're holding above. Nice consolidation right here. The 10, 30, and 50-day moving averages all converging together here. Nice consolidation. Something's going to happen with this stock. Would be surprising to me if that's a false breakout and it moves lower. That is still a possibility, so I want to be clear on that. But for now, it seems to be constructive, and you have to wonder, especially with the fact that it's in the S&P now, when may they announce a stock split? So yeah, pretty interesting one to look at. So right now, I think if you're long, you stay long. The negative here on SMCI would be if we broke below the point of this triangle. So there's a little bit of room there, which wouldn't feel good if it broke down. But unfortunately, that's the idea. You could maybe jump the gun a little bit if it broke below the 50-day moving average with follow through. You might say, okay, that's enough. I'm out. But the real disqualification of this upside breakout would be a break below the point of that triangle. That's by the rules. So, yeah, kind of interested in that one myself. Been watching that one ever since they announced it was going into the S&P and even before. So, man, absolutely awesome questions. And please don't leave yet. This is really cool stuff, what Zach's about to show you. And it allows you to post your own thoughts and ideas and get feedback from everyone else. When you have an idea or a thought, you're always curious as to what others think about it. And it's okay if not everybody agrees with you, because that's what makes markets. We can't have everybody feeling the exact same way, but it's really cool. So again, Zach, this is a post, not an idea. Let's put that on. UPS moving down to 134.40, and we'll make this one a short-term one. I think you can do 1 month on this one.
Okay, yeah, and with the post, the beauty of that is that it can all be added within the context of your discussion, right? You don't have to set the metrics as you do for a trade idea where you're locked in at those time frames or intervals. The draft idea is what I like to call a post. Can be edited and modified at any time. If you find, wake up on a new day, indicators are showing you something different, and you want to modify your previous expectations or the context that you had written there previously, you always have that option. So right here is just, again, I always like to start here as a menu view, a jumping off point, so you can just get a little excerpt everywhere that the platform has to offer. What's that?
I don't think you've taken the screen back. I think they're still showing SMCI on there. So you need to share your screen.
Oh, that's my fault there.
Come on, Ryan.
All right.
That's all right.
You're good. That's my fault.
You fall asleep when I'm talking.
Everything comes in threes, right? So no worries. So let's go ahead and head over to my next favorite aspect is the themes. And again, I just really like this page because it really helps spark some ideas and creativity for just overall my thoughts as to where I might want to start allocating funds, what sectors I might be most interested in, and also just staying up on current news, because a lot of these ideas, as you click through the different themes, you'll find of course the ideas from the community that are related to the sector, but there will be very detailed as well that will include news, and that might affect something that you're currently trading indirectly or directly. Now also we have this message tab over here on the side. We do the Hub Live recordings with Jeff Beamer every Wednesday. And so here you can see this is like a discussion board where you can come and find all of the recordings that Jeff does on Wednesdays for Hub Live. And we will have all of these other discussion groups here available very soon. As Rob's mentioned before, we're still in beta phase and we plan to move to production here in multiple weeks' time. And along with the AI scans, around 4 to 6 weeks, we look forward to offering those out as packages as well. So right now, the platform is still a bit restricted, but it is going to be a behemoth once we are in full production there. So again, we can go back over to my feed to see maybe what recently was posted, the most frequent in recent posts from our subscribers and community that is continuing to grow. We see the metrics on it, and it's quite impressive as to how much the usage and the duration of time that our subscribers are using this page. And so that's great to see that people are enjoying the overall experience. So without further ado, let's go ahead and post this post. We still go over here to the ideas page. As you saw, I clicked on that little light bulb there that was ideas. We'll go over to new idea, and we have the option to create an idea or a post. Now, some of you who have attended these sessions every week, you've heard me say this before, that I like to view a post as a draft idea, and creating an idea is essentially the same as sending in, that order, the limit order to your brokerage, but it's paper trading. You're not actually putting any capital. You're not allocating any capital. There's no risk on the line for that actual trade, but all of this information will be real time in regards to what you would experience if that capital was indeed real capital and real risk at hand. So the idea is when you're ready to fully, jump on board, you're confident and you're ready to send out that trade. Now, viewing a post is like a draft idea. Is the criteria is almost there, but there's still some boxes that need to be checked. And once that those boxes happen to be checked, or if they don't, then you'll either decide to post the idea, or maybe it'll just always remain a post. But that's what the purpose here for the post page is. So UPS down to, you said 134.40.
That is correct. And I think it'll happen relatively quickly within the next month. If you just want to add that.
Yeah, we'll just keep it simple with the time constraints, and I'll come back and Rob and I, one of us will come back and make it more pretty with the context that Rob was so in depth with and great detail with a bit earlier. But other than that, we're right at 2 minutes after the hour. I don't want to keep anyone for much longer than the hour they signed up for. But we have more exciting tutorials and webinars coming around the feature functionality of this platform in the very near future. So please continue to look out for those. As long as you're signed up for the beta, you will certainly be notified. So it's always a pleasure doing these sessions with you, Rob. I'll pass back over to you to wrap things up.
Yeah, agreed, Zach. And this one, very good with all the questions that were asked. We got to cover a lot of subjects, a lot of the general rules of Robisms, as you call them. And I just want to remind everyone the reason that it was a post and not a full-fledged idea is the AI score wasn't quite high enough. So that's what determines whether or not we send out alerts to our alert subscribers at EWOTrader.com or whether it's an idea during TradeFinder. So the score wasn't high enough, so we'll leave this one as a post, see what happens. Again, 58%. Some people may think that's okay. Not high enough for us with our experience with the AI. We really have a lot of faith in those higher scores and think that that's great. So hope everybody enjoyed their long holiday weekend. Thanks for spending some of the first part of the actual business week with us, and look forward to talking again soon. Take care, everybody.